A record-setting day, the Dow levitating to 19,000, settling above that level for the first time in its 120-year history. And while the Dow may be the world's most recognizable stock market gauge, it's not the only one at all-time highs. The Nasdaq and the S&P 500 are also at levels never seen before. So let's get right to the numbers. The Dow Jones Industrial Average advanced 67 points to 19,023. The Nasdaq added 17 and the S&P 500 rose 4 to close above 2,200. What will it take to get the blue chip index to the next big round number? Mike Santoli takes a look.
By crossing above the 19,000 mark for the first time ever, the Dow Jones Industrial Average has exceeded most Wall Street forecasts made even a few months ago. Yet as investors assess the meaning of this new round number landmark for the market's oldest benchmark, it's worth remembering that 1,000 Dow points are not what they used to be. The 1,000 points traveled since the Dow first hit the 18,000 level amounts to just about a 5.5% gain. And it took the Dow nearly 2 years to advance this modest distance after first reaching 18,000 in late December 2014. For an extreme comparison, after first reaching 10,000 in March of 1999, the Dow added its next 1,000 points in only 5 weeks, at a time when 1,000 points equaled a 10% jump. During the 23 months since its first trip to 18,000, the Dow dropped below 15,500 in last winter's panicky sell-off after the Federal Reserve raised interest rates, oil prices collapsed, and the Chinese currency plunged. The bounce back from the February market lows came as the Fed eased back on its rate hiking plans, oil prices rebounded, and the credit markets calmed down. On a fundamental level, it's no great surprise that the Dow has taken a relatively long time to make its latest 1,000-point run. Corporate earnings in total have been just about flat for 3 years running now. Only last quarter did profits start growing again, and economic expectations for 2017 are now clicking higher, in part on hopes for tax cuts and infrastructure spending under a Trump administration. While the Dow is made up of only 30 stocks, it can still offer decent lessons on how investment returns are achieved. Even though the index has only climbed at 5.5% in almost 2 years since hitting 18,000, when dividends are included, the total return over that time has been a respectable 10%. And because rising another 1,000 points from here would only mean a gain of just over 5%, a run to the next round number target of 20,000 wouldn't take all that much to achieve. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.